guys, welcome to today's Yield Labs YouTube video. My name is Toby and today I'm going to be talking about Prism Finance. So Prism Finance is something entirely new in this space. It's something that is going to change perhaps the way that we interact and work in this ecosystem, and it's going to be incredibly beneficial. Their summary is that they are aiming to refract digital asset. Let's take Luna for an example. What this means is if you want to stake your Luna into one of the validators to receive Genesis airdrops or airdrops from new projects coming into the ecosystem, you need to stake your Luna to a validator, and in turn you will be given these airdrops and rewards. However, now your Luna is locked into this validator for a period of 21 days, and your Luna is essentially become completely illiquid for that 21 days. Other users of the ecosystem will perhaps want to use their assets in a more liquid manner, such as using them to generate B Luna and using that as collateral to take loans, using it as liquidity, and pairing it with perhaps UST for a Luna UST pair and receive the rewards from providing liquidity for TerraSwap or another DEX. Now, what Prism is aiming to do is something really special and are essentially going to allow you to do both of these things. Right now, I hear you crying out, how can you do both? Well, currently you can't, at least not in cryptocurrency anyways. And that brings us to the refracting part of Prism Protocol. What they're essentially going to be able to do is when you deposit one of your tokens, such as Luna, into the Prism vault, they will give you a collateral token in return. Now, a collateral token can then be split into its two underlying assets, the principal token and the yield token. So the yield token is what is responsible for earning you yield, it's what is responsible for earning you airdrops and so on. And the principal token is what is responsible for you being able to keep that asset liquid, you being able to use it to borrow, you using it to trade and provide liquidity, and so on. What you will be able to do is split your Luna into two pieces, which will allow you to do both of these things. It's really a new paradigm. So let's take a little look at the white paper and let's see if we can't try and explain in detail how this is actually going to work and what this is going to look like. So if we head on over to the Prism light paper, these guys have beautiful graphics, by the way. You will see summary page. Prism is a revolutionary derivatives protocol that introduces new asset classes into DeFi. This is what we talked about with the collateral token, the principal token, and the yield token, allowing users to manage the risk associated with volatile prices and unstable yields in a simple, capital-efficient manner. Prism innovates on these inefficiencies and allows users to raise liquidity instantaneously by selling their future yield for a period of their choosing. When you deposit an asset into their vault, what you're essentially doing is you guarantee your yield, and it protects you against price movements, and it protects you against liquidations, and you can gain leveraged exposure to an asset's yield or principal in this way. So it says right here, introducing Prism. Just as a glass prism splits a beam of light into separate colors, Prism enables investors to split a yield-generating asset into its most basic components, the yield token and the principal token. These new assets will allow users to isolate the exact risks that they wish to speculate on or protect against. So by creating a new marketplace in the Terra ecosystem, they will create deep liquid pools that will enable these yield generation tokens, or YT for short, and principal tokens, or PT for short, to be traded on this AMM DEX. This will allow users to borrow with no liquidation risk or daily funding costs by monetizing an asset's future yield. You can swap your variable rate yields into fixed rate yields. You can take leveraged exposure to an asset's price or yield. You can manage exposure to currency risks by converting future yields into a stable coin. Sounds pretty sweet to me. You can participate in capital efficient liquid staking to receive physical delivery of all staking rewards, including airdrops, whilst being able to trade these assets instantly or deploy them elsewhere in decentralized finance. You can gain or swap exposure to other yield-bearing assets through the Prism marketplace. You can automatically claim all airdrops through Prism. My God, have we all been waiting for that? And ultimately, this reduces the administrative burden on your portfolio. I know a lot of people are visual learners, so let's take a look at this staked Luna, speculative on the price of Luna in the future, hopefully when Moon, and you are also exposed to the airdrops and staking rewards. If your Luna is kept liquid, you can provide liquidity and you can earn liquidity incentives, and there is no unlock period because you have kept it liquid. So the benefit of splitting your Luna in two ways to what we're going to now call P Luna for principal Luna and Y Luna for yield Luna is that you are now eligible for all of these things. So we've spoken very briefly about P Luna and Y Luna. Let's have a look at the mechanism that creates these tokens. That's down here in the white paper. So the Prism mechanism, as you can see, the collateral token is generated when a yield-bearing asset is deployed into the Prism vault. So to figure out the pricing of these two things, you have to assume that they are in equal parts. So the Y Luna and the P Luna are in equal parts from a collateral token. Let's look at an example. Let's look at the one that's listed in the white paper because it's easy to visualize and we can all look at this following the link down in the description. So a yield-bearing asset holder selects a term to commit their assets to Prism. This can be a 1 month term, 3 month, 6, 9, 12 months, or perpetually, like I mentioned. The smart contract will then mint P Luna and Y Luna with a maturity matching the selected term. The holder of the principal token and the yield-bearing token now have several options. You can stake the yield-bearing token in Prism and you can be eligible for staking rewards and airdrops. You can stake the principal token in Prism and you will be able to trade the YT and the PT separately. There also may be some arbitrage opportunities here if there is more demand for the yield token than there is for the principal token, or vice versa. You may find that the price of the two single assets at times may be worth more than one whole Luna. I'm going to imagine that usually that's not going to be the case and they will be in fact worth less. We'll see. YT can also be combined in equal amounts and burned in exchange for a collateral token at any time. So again, maths, principal token and yield token equal a collateral token. You can then burn the collateral token and redeem your original asset. The bottom of page 6 in the light paper, there's the first graphic that we can look at to visualize this. Again, getting some Pink Floyd vibes from this. So in goes the yield-bearing asset into the Prism vault. Prism vault splits this into the principal token and the yield token. And then on the right-hand side there, you have got a breakdown of all of the options that these principal token or yield tokens will allow you to participate in, or goals that they can achieve by having them split this way. Prism V 1.0 will be the first iteration of this. It will enable users to create both perpetual yield tokens and perpetual principal tokens. When you create a perpetual yield token, Y Luna, it will essentially give you the right to Luna staking airdrops forever until you redeem your underlying asset. Prism will allow minting, staking, liquidity provision, trading, burning, and redeeming of all of these assets, or all of these tokens that you have created from the underlying asset. So there's an example here of how a user could interact with Prism using Luna. User deposits Luna in Prism and mints P Luna and Y Luna. The user then decides to stake the Y Luna in Prism to start receiving staking rewards, including airdrops, and uses the P Luna to be a liquidity provider in the P Luna Prism AMM liquidity pool. The user starts earning liquidity incentives and AMM fees as a result. After a while, the user decides to sell the Y Luna and buy more P Luna. So we're weighting this now to one side. We've got more principal tokens than we do have yield tokens. The user unstakes the Y Luna from Prism and opts to immediately sell it on the AMM with no unstaking period. Again, we can do that because these are deep, liquid markets, and we have foregone that unstaking period that we are used to with delegating Luna. The transaction proceeds are used to buy additional pLuna. Again, we've weighted that stack side now, giving the user leveraged exposure to Luna's price performance with no risk of liquidation. Insane. So the Prism token itself, there will be a Prism token. It will be used for governance on the platform, and you will also be able to stake it to earn staking rewards and fees. In the roadmap for Prism V2, there is further utility added to the Prism token. Validators will be required to pledge Prism as collateral if they wish to be considered for Luna delegation from the Prism Vault, and they will also use a similar methodology to V-curve. That means that the longer that you stake your Prism for, the more weight that it will have and voting rights and voting power. So there's a little note down here about the token supply and distribution and how it is going to be allocated out to the masses. You can see 30% going to the community and liquidity incentives. You can see 15% going to airdrops, 20% going to the Prism ecosystem fund, and 35% will be for team, investors, advisors, and the IDO. The split of that is to be determined, but I think this is going to be a good one. So some notes here about the future roadmap. They will look to add more proof of stake assets, Ethereum, Solana, DOT, Atom, the assets that are native to the Terra ecosystem, such as UST, Mirror assets, Anchor, Mine, and each of their respective LP tokens, and assets that will be created by many of the new protocols at launch, including money market protocols, DEXs, and protocol bridging for USDC, DAI, Tether, all over to Terra, and so on. Ultimately, the end goal for Prism is to enable users to refract every yield-bearing asset that they can get their grubby mitts on. Yield farms, LP tokens, everything, basically. So why Terra? I think we kind of already know the answer to this. It is a truly decentralized algorithmic stablecoin. The fees are low, it's fast, like really fast. And with all of the cross-chain platforms coming in, it's easily accessible, and DeFi is definitely the way. CeFi had a bit of a time, had its time, and it's not the way anymore. So building these decentralized platforms on Terra just makes sense at the moment. It really does. I think that it's something that is needed, and I think it's something to be very excited about. So if you want some more information on Prism, you can hop on over to prismfinance.app. You'll find their website. You can see a frequently asked questions section that, you know, this thing isn't live yet, so you'll just have to get a feeler for it. Check out the white paper. I've tried to cover it and explain it as well as I could, and I hope that a lot of this makes sense. Check out their Twitter and follow them. Make sure that you're keeping up to date with everything that's coming out from the guys at Prism. I think you'll be really excited to follow the updates from these guys. And I hope that this video has been informative for you guys. Thank you so much for tuning in. I hope you're as excited for Prism as I am. I really can't wait for this one, and I hope you have an amazing day, and I will catch you next time.